everyone. Welcome to our webinar on ASEAN Economies and the Road to Recovery. Before we get started, I would like to go through some housekeeping tips. The Q&A box is on the bottom left, and you can use it to ask the speakers some questions. You can also ask us technical questions there if you have any. If your screen is frozen or you can't hear anything, please refresh the page and close all other windows. Now I'll hand it over to Oliver, who is your moderator and host for this webinar.
Thank you very much, Magda, for that. So welcome, everyone, and thanks for joining us on today's webinar. My name is Oliver Dancel-Fisher, and my job is to make sure that our clients have access to the most useful economic data with which to base their business policy and investment decisions. Now, alongside our partners with the Asian Development Bank, we've got a fantastic lineup of speakers to take us through their views on how the economies of Southeast Asia are likely to perform as a region over the coming years. We'll cover some of the big themes like the impact of COVID-19 on the region, forward-looking growth forecasts out for the next 10 years, the recent Regional Comprehensive Trade Agreement, and also finally the role of ESG and green bond investing. So our first speaker today is a Director General of the Asian Development Bank, who will share some opening remarks about the ASEAN region. Ramesh, welcome. Thank you very much for agreeing to open this webinar. I'll leave you to introduce yourself and then feel free to jump straight into your presentation. Thank you very much.
Thank you so much, Oliver. Greetings to all of you. As we all are longing for in-person seminars, I'm imagining that there are about 300 people in front of me. I am the Director General of the Southeast Asia Department at the Asian Development Bank. It's a great privilege for ADB to be partnering with Refinitiv for hosting this very timely webinar. A very warm welcome to Ms. Deborah Elms, Founder and Executive Director of the Asian Trade Center, Ibu Riza Tias, Head of Macroeconomics Group at the Economic and Monetary Policy Department of Bank Indonesia, and of course, colleagues from the London Stock Exchange Group Refinitiv, Ms. Wendy Yamazaki and Oliver, and my own colleague James Villafiorte from the Asian Development Bank will be also joining the panel. Let me briefly share with you a few challenges and opportunities facing the ASEAN region as we navigate the road to recovery. But at the same time, I also want to share a sense of optimism, in fact, lots of it. Data may not show, but I think in terms of what we are monitoring in the countries, we do have a lot of reason to be hopeful. The COVID-19 pandemic has reversed many of the hard-won economic and development gains in the ASEAN region, as all of you know. For example, last year, ASEAN lost an estimated $260 billion in output relative to a no-COVID baseline. GDP growth contracted by 4%, or 8.4 percentage points lower than the 2019 pre-pandemic growth rate of 4.4%. Based on data from the International Labour Organization, the COVID-19 pandemic led to 10.6 million fewer workers in employment in ASEAN last year, compared to a no-pandemic scenario. In 2021, the employment gap relative to the no-pandemic scenario is projected to remain quite considerable, unfortunately, in 9.3 million. Now, in addition, ASEAN recorded working hour losses of 8.4% in 2020 relative to the fourth quarter of 2019. Now, this is equivalent to a pretty massive working time of about 24 million full-time workers, assuming a 48-hour work week. Now, in terms of poverty, ADB estimates that the number of extreme poor in ASEAN, that's those living at $1.9 a day or below, rose by an additional 5.4 million people in 2020 as a result of the severe decline in economic activity. Now, this is unfortunately equivalent to a 40.3% increase in the number of extreme poor in the region. So definitely it's an opportune time to meet and share views regarding the regional outlook, the risks that we confront, and development challenges. But at the same time, we also need to look at what is happening in the region in terms of measures to overcome the pandemic and look ahead to post-pandemic recovery. Let me highlight 3 reasons as to why we do need to look at this, the trends. First, as we speak, the COVID-19 pandemic continues to besiege developing Asia, with ASEAN as one of the hardest hit sub-regions. Despite the more contagious Delta variant still circulating, the prospects of the region remain buoyant. Our Asian Development Outlook update, which was just released yesterday, estimates GDP growth in ASEAN to bounce back to 3.1% this year, before accelerating further to 5.1% next year on improved vaccination rates across the region. This growth recovery will be supported by parallel improved growth in advanced economies, modest improvements in consumer spending, and expansionary fiscal and monetary stance in most governments in the region. Although fiscal consolidation certainly will become an important agenda to grapple with in the year and probably years to come. Second, the region faces several global headwinds, which could make economic policy making more difficult. But at the same time, as I mentioned, many countries are making good progress on a number of economic recovery fronts, whether it's helping the poor or helping small and medium enterprises, and certainly particularly looking at vaccination. The progress in vaccination, despite significant good things happening, but for example, in the Philippines where we are based, progress remains largely uneven, with vaccination rates in Asia still trailing behind advanced economies. This, unfortunately, will lead to a 2-track global recovery, where the prospects for recovery will vary between countries that had rapid vaccination rollout and effective containment measures vis-a-vis those countries which are still coping with vaccination. Now, at the same time, virus mutations, including breakthrough infections and weakened vaccine efficacy, will also likely cause more global policy uncertainty in the near term. Now, if this happens, obviously this could dampen business and consumer confidence, derailing the fragile global recovery. Now, the decelerating momentum in world trade growth and possible trade disruptions from global value chain restructuring could further hurt the region's exports, which remain an important driver of growth. Now, third, as we move from crisis management to economic recovery, addressing absolute poverty and worsening inequality will be one of the most important aspects of economic recovery in the region. Now, as the 2-track recovery emerges, with advanced economies beginning to recover through sustained efforts, vaccination particularly, international support to lower-income countries will be critical to help them, number 1, avert the collapse of their health systems, number 2, raise their testing and surveillance capacity to assist in a gradual reopening of their economies, and number 3, support unconditional and nearly universal cash transfers to the poor, but this in a fiscal consolidation era certainly will be challenging. Now, the cost of these interventions are huge, and poor countries do not have means to finance them. Now, more importantly, we are also not only economic managers, but also stewards of this planet. So, as we rebuild from the devastation brought by the pandemic, we also need to protect the environment and make the recovery green, which will also support growth and job creation. Now, this task is particularly important as we are about to assess our performance with respect to the Paris Climate Accord later this year at COP26 in Glasgow in November. So overall, there is a lot of work ahead to meet the sustainable development goals in ASEAN as well as beyond. Now, with these thoughts, I'm very happy to join all of you in this very timely webinar. My thanks to our colleagues at Refinitiv. Hope all of us can work together to turn this crisis into an opportunity. Thank you so much for patiently listening to my remarks. And over to you, Oliver. Thank you.
Thanks. Thank you very much, Ramesh, for those opening remarks. It's all very useful at this stage to understand the current state of affairs in the region. So, our second speaker is a senior director based within ASEAN in Refinitiv, who will now share with us her thoughts on some of the opportunities we're seeing coming out of the region. Hi, Wendy, welcome. The floor is yours. I'll leave you to introduce yourself first, and then it's over to you.
Thank you, Oliver, for the introduction. A very warm good afternoon to everyone. I'm Wendy Yamazaki, Senior Director at Refinitiv, which is now part of the London Stock Exchange Group, and I'm responsible for the government relations and regulatory strategy for Asia Pacific. So I'm very pleased to be invited here today to join you for this webinar on the ASEAN Economies, the road to recovery. But before I begin, I thought I would like to thank Mr. Subramaniam for his very enlightening opening remark, highlighting some of the region's key risks and development challenges going ahead. This would help to set some context for the discussion later on. So it's been about 2 years since the outbreak of the pandemic. And as we enter into the last quarter of 2021, are there pockets of positivity for a post-pandemic recovery in 2022? So this webinar is therefore very aptly built around the theme of looking ahead to the future in a post-COVID world. So I look forward to hearing from our expert panel later on how ASEAN countries can tap the new opportunities to ensure a more sustained and resilient recoveries in the years ahead. So we're all going through this unprecedented period. At the same time, the pandemic has accelerated the adoption of technology in a pace that we've never seen. While many doors have been shut, the pandemic has also opened many. As we heard earlier, we should turn this crisis into an opportunity. So where are these opportunities? I shall briefly touch on 3 observations in the next few moments. So firstly, the pandemic has exposed a weakness and vulnerability in the global supply chain. So this has made governments and businesses recognize the importance of diversifying their sources of supply, manufacturing base, and even their customer base. So the signing of the Regional Comprehensive Economic Partnership in November 2020 is thus very timely, as it provides a platform for ASEAN to look into enhancing regional trading rules, setting standards to support greater intra-regional trade. As we all know, RCEP accounts for about 30% of the global GDP and also 30% of the world population. So the potential is huge. The pandemic has therefore given countries in the region an opportunity to actually rethink, restructure, and recalibrate their approaches to building a more resilient supply chain for the future. So if I can share an example, countries can leverage on the enhanced rules of origin under RCEP to advance the sustainability agenda. As we know, many of the governments in the region are now prioritizing sustainable transport, such as manufacturing and adoption of electric vehicles, and even the development of capabilities in autonomous driving technology. So the region's well-established automotive hub, such as those in Thailand, Malaysia, are therefore very, in a good position to leverage on RCEP to create an integrated production cluster. And similarly, the recent announcement by ASEAN economic ministers to start negotiating on the ASEAN Digital Economic Framework by 2025 is another good example on the way forward. A focus on digital transformation to enable cross-border flow of goods and services, and especially data, will help ensure that the region continues to grow global trade and investment and better position itself for a future digital world. So second observation that is apparent is that while technological adoption and digitalization have accelerated during this period, I think the pandemic has also highlighted a great divide between the different stratas of society. If I may also illustrate with another example, it was estimated that about 1.8 billion people in Asia live beyond the reach of a mobile network. So one can imagine during this pandemic, your daily activities are restricted. The disadvantage for people such as students or low-income workers with little or no internet access becomes quite clear. So again, this example highlights the divide that exists, and it also reminds us that we need to invest in more infrastructure, and this need not be limited to physical infrastructure such as road and railways, but we should also look into social, including health, and digital infrastructure. So what's the state of infrastructure investment in the region? If I may refer to a slide from Refinitiv's data, we can see that the year-to-date figure for 2021 is already reaching almost $449 billion, and this continues to be on an upward trend. This amount has already surpassed the value of projects as announced for the whole of 2020, which again suggests that the pandemic has actually little effect in slowing infrastructure ambition. So while infrastructure is the backbone of economic growth in the region, we need to ensure that what is built is sustainable. So if I can refer to another ADB report, it was estimated that ASEAN will require $184 billion per year from 2016 to 2030 to support the needed investment in infrastructure. And this amount increases to $210 billion per year when you consider the additional cost that's required to ensure that what is built is sustainable. As government budgets continue to remain the main source of financing for infrastructure in ASEAN countries, the magnitude of the investment gap and the constrained public budget will mean that we will need a greater level of private investments going forward. So we should invest in sustainable infrastructure so that we can build this connectivity to close this divide. And this can help us to shape a fairer, greener, and more inclusive future. So lastly, we are finally seeing the maturing of the ASEAN startup ecosystem, and this is an important role they can play. So in the last few months, notwithstanding the disruption caused by the pandemic, the region's startup environment has actually gotten very exciting. Some have described this as a last mover advantage, as companies in the region have the benefit of learning from the successes and failures of their peers in the US, China, and even the Indian market. So according to a VC report, ASEAN technology startups have a combined valuation of about 340 billion, and that figure may jump more than threefold by 2025. We know a number of the region's prominent startups are already in the process of going public. Some have already made an announcement. We are all, we heard of Grab's 40 billion merger with Spec Altimeter, similar IPO announcements by companies such as Gojek and Bulalakpa. So again, if we look at Refinitiv's data from this pie chart, this shows a backlog of Asian IPOs that's coming into the market, and a bulk of which is, part of which is coming from ASEAN. So on specs, again, we saw early excitement during the beginning of this year. And although euphoria may have faded a bit since March, but the region may see a renewed interest with the latest announcement by the Singapore Exchange as the first major exchange in Asia to allow specs listing. We have also heard that some of the regulators in the region are also looking at establishing specs framework. So we'll probably see more activities building up. Bankers are also expecting more of these specs transaction materializing in the later half. So as you can see, there's no dearth of funding options available to the region's startups as investors continue to look for good opportunities to invest. ASEAN startups reportedly raised a record of 6 billion in the first 3 months of the year. Therefore, we can see that ASEAN startups have built a thriving internet economy. Now they have an equally important role to play in the recovery from the COVID pandemic. So many of these companies are actually well placed to tackle some of the biggest challenges the region faces, around, say, education, health, e-commerce, or even logistics. So if I may conclude, if managed carefully, I think the post-pandemic moments actually presents opportunities for investments and growth. The fluidity of the ongoing situation have highlighted the importance for government, businesses, and individuals to work collectively to manage the social and economic pressures in the short term and to work together to build resilience for the long term. I will stop here, as I believe some of the issues I touched on today will be discussed later by the panelists. On this note, I want to wish everyone a fruitful session for the rest of the afternoon. Thank you, and back to you, Oliver.
Thank you very much, Wendy, for those important insights. I guess this very much helps us set the scene now for the next part of the webinar. But firstly, for all of you listening, please send in your questions on either Wendy's or Ramesh's presentation, as well as for what you'll hear in the panel discussion, and I'll lead shortly. And obviously, we'll try and aim to tackle as many of them as possible at the end of the webinar. So now let's first talk about economic content. One of the biggest reasons why we're holding this webinar is to inform our audience, many of whom are regular users of Refinitiv data stream platform, that we have just completed a very large expansion of our national source economic content on Refinitiv. So here's a summary slide of the expansion. Very briefly, we now have over 1 million time series dedicated to ASEAN region alone and counting. And as you can see, the total numbers are on the right-hand side of the slide per country. So where do we get our national source content? We mainly get them from all the usual suspects. So the central banks, for example, the national statistical offices, and any major national key institutions. And I guess the major benefit for this data for national source is the fact that it's incredibly timely. In terms of the international source data, we've got all of the main international recognized institutions represented here, such as the OECD, the IMF, World Bank, Economies Intelligence Unit, and many others. And I guess the major benefit of this data is being able to compare on a standardized basis the performance of many economic indicators across different countries within the region. So I guess for those of you who have access to it and those of you who want access to it, definitely have a look around. There's a lot there for you to get your teeth into. Now, given that a lot of the users will try and use it to spot investment opportunities and trends within economies and sectors, I feel now is the best time to engage the audience and let's conduct a poll. So, I'm putting a poll on the screen. And the poll reads, what will be, in your opinion, the biggest driver of economic recovery across ASEAN post-pandemic? Will it be infrastructure spending? Will it be trade? Will it be low interest rates? Or will it be something else? So I think what I'll do is I'll leave you to answer it, but I will come back to the poll at the end of the webinar just before the Q&A, so then we can see what the score is. So I think without further ado, now is a very good time to start the poll, to start the moderating session. Okay, give me 1 second. Perfect. So we have 3 very experienced speakers in our respective fields. We have James from the ADB, we have Deborah from the Asian Trade Center, and we have Riza from the Central Bank of Indonesia. James, let's start with you. Would you like to do a quick 30 seconds of yourself and the work you do?
Thank you, Oliver. I'm James Villafuerte from Economies, Senior Economist from the Southeast Asia Regional Department. My work is basically leading the network of economists in our region, and we look at regional cooperation and integration issues as well as economic growth and development issues. Thank you, Oliver.
Perfect. Perfect, thanks. What about Deborah, yourself? A quick 30 seconds on yourself and the work you do.
Thank you very much. My name is Deborah Elms. I head the Asian Trade Center out of Singapore. We work with companies and governments on trade policy. And so for companies in particular, how do you use various kinds of trade agreements to give yourself an advantage over your competitors? And for future agreements, what are the kinds of provisions or rules that businesses would like to see? And then we work with governments to see whether or not that makes sense to them.
Perfect. Thank you very much for that. And last but not least, Riza, quick 30 seconds on yourself and the work you do.
Hello, my name is Riza. I'm the head of macroeconomic groups from the Central Bank. I'm in charge in assessing the macroeconomic indicators, global and domestic economics, as well as the financial global and domestic market. And also proposing, based on the assessment of the policies to the Board of Governors on Bank Indonesia. Thank you.
Perfect. Thank you. And welcome everyone to the panel discussion. Thank you very much for deciding to join. Let's jump straight into the first topic. 1 second. Okay. So I think we'll start with ASEAN growth rates forecast. Now, I guess the context here is pre-pandemic and also, going forward. Places like the IMF, many different organizations had forecasted ASEAN to have some of the highest growth rates in the world. So I think this is a very bullish forecast from Oxford Economics. And I think, James, given that the ADO have just put out their short-term growth rate forecast, this kind of seems like an opportune time to discuss this. So, James, do you believe the COVID Delta variant in this respect to be the single biggest determinant of growth over the short term across these countries? I mean, or do you believe there's some other factors we need to point out here to consider? What are your thoughts?
Certainly, the COVID-19 pandemic is quite unprecedented and has impacted the economy quite severely. But in terms of what drives growth in Southeast Asia, there are many factors that we have seen based on our latest assessment of the outlook for ASEAN. First of all, compared to our view in April, we have slowed the growth forecast for ASEAN from 4.4% in April to 3.1% yesterday. And the main reason for this decline in growth is really the resurgence of the more transmissible Delta variant. However, I must say that this, while the growth is slowing down, this growth performance is still quite robust. Given that we have seen a large drop in output in 2020, I think improvement in global demand, which actually is a source of exports for the region, the huge debt that government in the region has incurred to support its health program, particularly vaccination, as well as pent-up demand by the consumer sector are all driving economic growth in the region. Aside from that, I think as we see the vaccination rate progress, I think this problem of confidence, which is brought about by the uncertainty of COVID, are slowly being repaired. For example, cash transfers by government are making households more bullish about the future. Better disease surveillance is also allowing us to track the extent of infection and also to manage hospitalization, and it's giving a good confidence boost to consumer. On the business side, I think the shift to online transaction has allowed business to continue operating despite the disruptions from COVID. So I guess while COVID does present a challenge, there are many instruments and drivers of growth that's actually supporting a solid recovery for ASEAN.
Perfect. Thank you so much, James, for that. And I guess I'll quickly jump in there for you, Riza, and ask you this question using, I guess, Indonesia as a case study. I mean, do you believe 7% growth rate per annum year on year to 2030 seems reasonable? I mean, what do you believe is the single biggest determinant potentially of that in Indonesia? Riza?
Sorry, I got offline, gentlemen. Would you repeat, please?
No, that's fine. That's fine. So I think in this specific example, Nikki, maybe let's use Indonesia as a case study. So in this graph, we've got about a 7% per annum GDP growth rate out to 2030. I mean, do you think that seems reasonable? I mean, do you think that there was a specific driver of this? What are your thoughts?
Yes, it is very reasonable, actually, indeed. So we have to say that we are still struggling to boost our domestic consumption and also investment, of course. But we have a strong driver from our external sector, namely export, that coming from our primary goods such as coal, CPO, and some like nickel, alumina, which is very related now with the new trend of the transportation recovery sectors. Yeah.
Okay, perfect. Okay, so let's switch over to the next topic here. Central bank policy rates and inflation. I think the context for this more than anything is inflation at this stage in ASEAN seems to be quite low. And I guess that has meant that central banks, not just in ASEAN, but also around the world, have very much kept interest rates, kept policy rates really quite low because inflation in this respect has been low. But what we're seeing as countries start to come out of lockdown and opening up their economies again, inflation does seem to be a problem, hence why a lot of central bankers seem to be treading an interesting path between obviously having to manage the economy overheating, but also inflation potentially running rampant. So I think, Riza, I'll ask you another question. So I know inflation seems to be a problem in many other economies. Do you believe that ASEAN, for example, will face the same issue once they start, winding down their lockdowns, and what are the implications for how those central banks should set policy rates?
Okay, maybe in the case difference between countries, even in ASEAN countries. For Indonesia, I can tell that economic stability now, which is give us a quite big rooms for our accommodative policy, is reinforced also by inflation, which remain low. Core inflation is low and under control, in line with compressed domestic demand maintain exchange rate stability, and consistent with Bank Indonesia policy to anchor inflation expectation to the target corridor. Bank Indonesia is also firmly committed to maintaining price stability and strengthening policy coordination with the central and regional government through national and regional inflation control teams to maintain headline inflation with the 3.0 plus minus 1% target in 21 and 22. I understand that some countries already recognize an increase in inflation because of the global, especially from the global increase in the raw material prices and also some shortage in the supply chains. But for Indonesia, the case is very minimum because our inflation structure make it some transmission from the global prices to our domestic prices are very limited. Thank you.
Oh, perfect. Thank you. And James, back to you. What do you believe? Do you agree with that? What do you see as some of the broader inflation pressures coming out of the region over the next 2 years, for example?
Oliver, first, based on our ADOU, which was released yesterday, we've actually downgraded our inflation forecast for ASEAN from 2.4 in April to 2.2% yesterday. I think the main reason for why inflation is declining in the region is actually, one, the labor market continues to be quite weak. Growth was actually much weaker than what we anticipated. And then there was also a very good bumper harvest of agriculture, which are actually bringing down some of the food prices. However, having said that, and I agree with our colleague from Indonesia that the picture from the region are actually quite diverse. For example, inflation in Cambodia, Indonesia, Laos PDR, and Vietnam are actually decelerating. But for other countries, like, for example, Brunei Darussalam, Malaysia, Singapore, and Timor-Leste, they're actually increasing. And I think on the upside, basically the factors that are pushing inflation risk higher is that one is the expansionary setting of monetary policy and fiscal policy. We know that in 2020 and 2021, government has actually injected a lot of liquidity in the system, and the expectation that this liquidity injection will actually contribute to higher prices. The other factor as well is that increases in global commodity prices, both fuel and precious metals, are contributing to higher construction costs, which has flow-on effect, and transport costs, which has flow-on effect on prices of goods and services. Trade disruptions globally and regionally, we know, have also increased the cost of shipping and the cost of transport, which are also being passed on to prices. So there's a worry that once the demand actually recovers and the labor market strengthens, these inflationary pressure will come to bear in terms of the region. Thank you.
Perfect. Thank you. Thank you very much, both Riza and James, for your insightful remarks there. Okay, let's turn over to a very interesting worldly topic, trade. So viewers can see a chart on here for interregional trade for the 7 largest Southeast Asian economies. And I think the background to this more than anything is, I think given that we've just had the RCEP, the world is really watching for, success of this more than anything. And I guess the chart here shows the current imports and exports of those large economies within Southeast Asia. So I think, Deborah, turning to you, very much a trade expert. So not taking into account specifically the non-ASEAN countries like China and Japan, for example, who do you think will be the biggest winners of the RCEP trade deal recently implemented?
Okay, so I have to exclude the other players, because actually I think the biggest winner will be Japan, and that's just because Japan had no previous agreement in place with Korea or with China. And so when you have an agreement, you tend to have more benefits with players that you didn't have something with before. Within ASEAN, because ASEAN already had agreements in place between all of the members of RCEP. ASEAN was the driving force behind RCEP in the first place. Let me just remind everyone who's in RCEP. So this is all 10 members of ASEAN, China, Japan, Korea, Australia, and New Zealand. So 15 countries. Agreement was signed last year, should be implemented, fingers crossed, January 1st of 2022. It will not include all 15 countries at the start, I don't think. I find it hard to imagine that Myanmar, for example, will be able to implement RCEP on schedule. But once it's ready, then it will join with everyone else. So of those countries in ASEAN, who will do the best? I think in general, when you are connected to supply chains and when you are in a position to leverage supply chains, you do better. So Thailand, for example, has a tradition of companies working very closely with various kinds of trade activities to manage their supply chains in ways that take advantage of any Thai benefits. So Thailand should do well out of RCEP because of what private corporations are doing, not so much because of what Thailand is doing, but because it allows firms who are based in Thailand, who may be Japanese, Korean, Chinese, et cetera, or maybe ASEAN, it could be Thai, to do more business in the region. And I think in general, that's what you're going to see. Hopefully, RCEP will lead to more inter-ASEAN trade, which has been stubbornly stuck at less than 25% of trade for a very long period of time. And so you'd like to see greater integration in ASEAN as part of the RCEP commitments.
Okay, perfect. Oh, and in a way, I guess you've almost sort of preempted what I was going to ask next, which was really, are you more likely to see inter-regional trading between those countries, or do you think there'll still be a big focus very much on the rest of the world? I mean, what do you think the dynamics in the short or longer term are going to be in that respect?
Well, what I think RCEP does that is new and is really game-changing is it starts to create the conditions for doing trade in Asia for Asia. Now, I know many people are going to say, but Asia's been very integrated in global trade, as you can see from the figures here, for a long time. I mean, Singapore's trade figures dwarf its domestic economy, certainly. And so what's new? And I would say what's new is that most of those exports, especially for the region, tended to go to the United States, to the European Union, some to Japan, but most of them were final products. So lots of raw materials, parts, and components moving around in Asia, but final product consumption tended to be located mostly in the US, North America, and in Europe. What RCEP will do, I think, is create a condition for final product trade in Asia for Asia. And the reason for that is that we've had a lot of impediments to trade in final goods and services and investment in the region, especially between regional firms, so firms that are located across those 15 markets. Once you remove many of those impediments, you should have more final products and services that get traded across the region rather than looking to external sources of growth. And I think that is something new, and that's something that firms need to be prepared for because there are real opportunities there that we haven't seen before.
Perfect. Thank you very much, Deborah. I guess very much wait with bated breath as this trade deal continues to be implemented in years to come. Great. Okay. So, and final topic now is again something very topical. It's all about ESG investing and green bonds. I think it's very much on the backdrop given we've got the upcoming COP26 conference. So I think the following chart that you see here is very much how green bonds ETF have performed since the pandemic more than anything. James, I'm going to ask you a question on this. I mean, given that the ADB does quite a lot of work in the green sectors here, do you think ASEAN countries will use the pandemic as an opportunity to drive economic recovery with green investments? What are your thoughts on that?
It's an affirmative yes. Based on our work in the region, much of the discussion in terms of building back better after the pandemic is also building back greener. And I think the main reason for that is, as a region, ASEAN is quite vulnerable to climate change and natural hazard. We know that the ASEAN economy, part of the growth of ASEAN economy is dependent on natural resources and agriculture. And these two sectors are highly sensitive to changes in climate and also disasters. Therefore, investing in green infrastructure will be needed to ensure that when we build back from the pandemic, we also build back a more sustainable economy. We know that the gap in ASEAN in terms of the Paris Agreement is actually quite large. For example, if you look at the unconditional pledge, ASEAN economy should actually increase its decline in carbon emission by 11% up to 2030 just to comply with the Paris Agreement commitment. If you look at its conditional pledges, they need to cut their emission by almost 24%, which means that the green agenda for Southeast Asia is quite important. And the key here for supporting the green agenda is actually to build the de-risking and leveraging ability of government to get green finance to support projects. And this is where multilateral development banks like the ADB can actually develop process and strategy to raise their capacity to leverage finance and also to de-risk investment pipeline. And for example, the ADB, for example, has implemented the ASEAN Catalytic Green Finance, which actually mobilizes green infrastructure by using de-risking funds and technical assistance in order to catalyze private sector capital. So far, since the pandemic, ACGF or the Catalytic Green Finance has already mobilized 1.7 billion in co-financing commitment. So this will actually be very helpful in bringing this green agenda as part of economic recovery.
Perfect. Thank you very much, James. And I think just sticking with that, I mean, do you believe there are any specific areas that some of the member countries are likely to focus on? I mean, will it be energy, infrastructure, or some other sector to drive growth? What are your thoughts?
Certainly, the most important priority is really in terms of energy transition, because energy, electricity, and power generation really is the main sector that emits carbon, right? So I think a plan to really substitute renewable sources of energy such as solar, air, biomass, and to actually stop the construction of fossil fuel plants will be a good start. But there's also a big push towards investing in circular economy, which prioritizes the recycling and waste management, especially when we look at ADB's agenda for the blue agenda in terms of cleaning the plastics out from the ocean. That will, I think, be very important, especially as we know that tourism has been badly hit by the pandemic, and this is time to really make tourism more sustainable, to look at the ecotourism side, so that probably when we open, we can actually offer a more sustainable type of tourism for Southeast Asia.
Perfect. Thank you very much, James, for that. Okay, I think that very much concludes the poll discussion. The panel discussion. What I think I'll do now is just put on the screen the results of the poll I ran earlier. So the question was, what will be the biggest driver of economic recovery across ASEAN post-pandemic? And interestingly, both infrastructure, spending, and trade were more or less equally split at 40.5% and 38%. So interesting outcome there. Okay, now it's time for the Q&A session. So I'll start asking some questions. Give me 1 second. Okay, so Risa, I think this is the first question for you, and this is very much about inflation. What are the sort of main drivers in inflation that you think will persist in the medium term? And I think the person who gave the question named stuff around reshoring, trade tensions, protectionism. Do you think those are quite key determinants of inflation in the medium term? That's a question for you, Risa.
Okay, thank you. First, in the medium term, the inflation for the regions and also for Indonesia, I think we have to watch very careful with the effect of the pent-up demand. So, is it the pandemic now have scary effects from the supply side, then how the supply side then can catch up when the pent-up demand, when the recovery of the economy coming for, let's say, next year and so on, and then the pent-up demand have to fulfill by the enough capacity of the supply side. And second, how we manage the supply shortage also, what now is we are facing now. Yeah. For example, like the issues of the transportations, issues of the semiconductor supply shortage, and also issues of the labor side. It's the recovery after the pandemic will be support with the current capacity of the labor, which is maybe different capacity with the labor what we have before the pandemic. So the inflation coming from the supply shortage, the inflation coming from the labor mismatch, and also the impact of the pent-up demand, I think is one what we those three areas that we have to have the watch carefully as our risk in the inflation, and also not to forget the impact of the very ample liquidity that we give to the economy along in the pandemic periods. On the quantitative easings, on the money that we give to the economy to boost the economy, will give us the risk of the inflation when the economy recover in the medium term. Yes.
Perfect. Okay. Ramesh, are you still online? I'm just quick check to see if you're still here. Okay. James, I'm going to ask this question specifically for you, and I'm hoping you can answer this one because this is quite topical. So do you think a contagion is possible with the recent Evergrande fiasco going on? How do you think it will affect the economies of markets outside China, especially ASEAN markets?
Thank you, Oliver. That was also in our mind. And actually, as we speak yesterday, we were actually consulting with our economists on the ground in terms of possible spillover effect of the Evergrande. Honestly, off the top of my head, my gut feel is it will have a limited impact on ASEAN for the main reason that I think the property market in China is not directly related to the property market in the region. And then I think although the size of the loan are actually quite large, the region's financial structure is quite resilient. We have actually, banks are well capitalized in the region. Buffer stocks are actually quite high. And regulatory forbearance in terms of some of the pressures existing in the banking system is actually helped them tide some of the difficulty in terms of the balance sheet. But we are still looking more deeply into this issue because this is quite new.
Okay, perfect. Thank you very much for that, James. So Deborah, this is now a trade question very much for you. And I think the background for this is, you've got a trade deal between a whole bunch of ASEAN nations, but obviously it doesn't include every single one you could potentially think of. I mean, do you really reckon the RCEP trade deal will be very much like, for example, the EU and Brexit in this respect in terms of the different kind of economic alliances? You sort of see similarities or differences there?
That's an interesting question. So I would say, first of all, the RCEP agreement is not the second coming of the European Union. This is not pooled sovereignty. It's not tight integration. It's more economic integration than we have seen up to this point, but it is not trying to make a jump into, being a single market. So on its own, it doesn't necessarily drive as much trade and economic growth as you might imagine, but with a giant caveat. Once firms start to see that there is something called an RCEP, that it matters, that there are some benefits from that, they may change their strategies, even if they're not actually using the trade agreement. So one of the sort of surprising statistics we see over and over again is that when a trade agreement is announced, trade increases. And it increases even before the agreement comes into force, which means that firms are sort of sitting up and taking notice and saying, wow, this looks like something that might be important to us, we should act, even though they're not actually using the terms of the agreement because it's not yet in force. And I think we're going to see the same thing with RCEP, which is there are some really useful things in RCEP. It will drive economic growth and development in some ways. But what is especially useful is the extent to which companies decide, especially on investment decisions, sourcing decisions, final market decisions, based on their perception that there's something happening in Asia. So once you start to have that, then you get a bit of a virtuous cycle. More investment in Asia, more growth in Asia leads to more investment and growth in Asia. So that's what we're hoping will happen here in RCEP, is that you catalyze movement forward, especially as we're coming out of pandemic situation at some point.
Perfect. Thank you very much, Deborah, for that. Riza, back to you. It's another inflation/central bank policy question. So I think especially in the US, there's a kind of a lot of talk about the Fed tapering, but also potential for them to raise interest rates. Of course, they just recently said they may not. But do you believe then that that has an impact on Asia specifically? Do you think Asia suddenly now becomes more of a desirable region to invest in because of the fact that the US are starting to now potentially think about raising their interest rates? What are your thoughts on that?
Thank you, Oliver. For now, especially after the Jackson Hole, after the FOMC communication getting clearer and clearer, though Bank Indonesia expect that the risk of the impact of changes in the Fed's policy on global and domestic financial market is relatively manageable. The relative manageable risk was influenced by better condition compared to the previous period, namely when we have 2030 taper tantrum. Why? There are actually three factors here. First, that the Fed is currently more consistent and transparent in communicating the direction of accommodative policies in forward guidance. Second, Bank Indonesia's policies to stabilize the exchange rates through triple intervention, spot, the NTF, and also government bond trade is expected to be able to mitigate the risk of further impact of tapering. And then third, the fundamental condition of emerging market economies also, including Indonesia, now much better than what we have in 2030. Indonesia's external sector, for example, is very resiliency, has improved significantly, which is reflected, among others, in the sound balance of payments supported by a narrow current account deficit, as well as capital and financial account surplus. And also we have low inflation, high foreign exchange reserves, and low foreign ownership of our government bond. So to lessen the impact of tightening in the global financial condition, Bank Indonesia continues to optimize its policy mix toward maintaining macroeconomic and financial system stability, while we still supporting effort to improve the national economy. The use of this policy mix provides flexibility by allowing the central bank to implement array of policy tools depending on the conditions and situation at hand. So it's very dynamic, Oliver. And in this case, a sub-tightening of global financial condition, if any, may result in a more limited room for monetary policy easing. However, the central bank can optimize various instruments now in the accommodative policy mix to continue to support the economic recovery process while safeguarding stability. One indicator I would like to share with you that despite of the increase of the U.S. inflation, if you look and monitor closely of the USD yield, now the USD yield is not going up one-to-one with the inflation. What does it mean? It means that the market itself believes that the shock of the tapering now it's far different with what we have the shocks in 2030. This one now is more manageable. The communication of the Fed is more transparent. They are going on and on and on to tell the world that they will be very careful with the tapering. Okay, thank you.
Perfect. Thank you so much for that. So we've actually got quite a number of questions here, and we're obviously not going to be able to get through all of them, but all of your questions will be answered in due course offline off the webinar. And I think in the last 3 minutes before we finish, I'd like to hand back to the panel members just to give a quick 1 minute closing speech on one or two things that they want to share with the audience. So James, maybe start with you. Do you have anything specific, last closing remarks you want to share in terms of anything you might have added or missed previously in any of your presentation?
Sure. I think 2 words. One is we really have a very cautious optimism about the economic prospects for Asia. And it's mainly because the deep drivers of growth are actually still there. It has been disrupted by COVID, but the structural strength, like for example, if you look at trade, if you look at consumption, domestic demand, if you look at use of technology for business, ASEAN has been actually leading the world in terms of using all these initiatives to further strengthen growth. And on RCEP, I would just like to mention that I think one advantage of RCEP is actually this brings together a single rule book, which can actually reduce the cost of different rules of origin coming from bilateral FTAs, for example. So that's an additional fact. And this single rule book may actually help strengthen the development of regional supply chain. Thank you.
Perfect, thank you. And Deborah, anything you would like to add as a closing remark that you might have missed?
I would just highlight the importance for ASEAN in particular of getting policy settings right for the digital space. And the good news for ASEAN is that they've been doing a lot of work in digital and e-commerce trade in general. We have a new agreement that's coming into force and a 5-year work plan and a lot of activity around digital. But I think the implementation of that is the critical element that is always weakest in ASEAN. The more that you can effectively implement policies to support digital growth, the better off the region will be, because especially coming out of COVID, digital is the future. And so ASEAN will need to have collective approaches that are implemented in collective ways in order to really leverage that opportunity.
Thank you very much, Deborah. And I guess, Riza, you have the final remark in closing, so over to you.
Yes, thank you. I think in a very dynamic and uncertain condition like now, the key word is synergy. In the national level, regional level, ASEAN and plus, and also in the global level. Why we need energy? Because the key now is how we maintain the stability. So with the stability, we have enough room to support the growth, to support the recovery. Some risks, which was unknown before, now already getting known risks. But the risks are still there. the dynamic of the COVID, the exit policy of the use liquidity that not support to recovery, actually it is unknown for all of us. So again, the keywords is synergy. Thank you, Oliver.
Thank you very much. And thank you very much to all our presenters today, and Ramesh and Wendy, for your opening remarks. Very much appreciated. Magda, I'll leave you to close in terms of any technical aspects you would like the audience to know in terms of follow-up. Would that be okay, Magda?
Yeah, sure. So after this webinar, we will send you a post-webinar email that will allow you to access the on-demand link so you can watch it again if you want to. Otherwise, you can take a look at the slides. We will attach it to the email as well. Thank you for attending the webinar. Hope you enjoyed it.